What is up, traders? Hope everybody's doing well. Today's lecture is going to be about the 930 fair value gap, or as ICT calls it, the first presented fair value gap after the 930 opening bell. This PDRA is a very, very important PDRA that I use a lot in my entries and in my exits, and I refer to a lot in my trades, whether to get in, get out, kind of gauge where the market is headed, and all that nice good stuff. So in this lecture, we're gonna discuss how to identify it, when to use it, and all that good stuff. So first, present fair value gap. As the name suggests, it is the first fair value gap after the 930 opening bell. So if we bring our crosser here, you can see this is the 930 opening bell. If you go down, it's 930. Right, so this is the 930 open. Plot that. Cool. Now we look for the first fair value gap that happens after the open at 930. So if you look, it's not this candle. It's not this candle. Not this candle. There's no fair value gap yet. This is not a fair value gap. No fair value gap. No fair value gap. This is the first present fair value gap on the 1 minute chart after the 930 open. So I like to just call it the 930 fair value gap, and I label it as the 930 fair value gap. So when I type in, all I do is just type in 930 fair value gap, because I can't be bothered to type in the exact time of every fair value gap every single time. So just always, you'll see me annotate it as the 930 fair value gap, and that's it. Okay. And sorry for my voice, I'm just a bit sick today. So once we've identified the 930 fair value gap, now we can use it. This is a very important PDRA that can be used throughout the entire day. And as ICT says, the first presented fair value gap on Monday, if you extend that throughout the week, price will refer back to it. Okay, and it will use it in the future. Now, for me, honestly, personally, I don't bother. I don't have the Monday's first presented fair value gap and extended throughout the week. I just have each day's current 930 fair value gap plotted. And if I can use it as an entry or a way to get out of my trade, I will do so. Okay. So we'll see here how during a lot of cases, how price does respect it, right? You see how it was created, price respected it. When it inversed it, price respected it, use it to propel price lower. Here, if we go to the right, we can see how price respected it very nicely right here and used it to propel price much higher, right? You can see how price from this point, it came down, took relatively equal lows, right here, tapped into the 930 value gap. When you extend it, during what time? Look at the time lower. Here's the 1050. As we discussed, it's 1045. So I'm just going to start with 1045, 1115 macro. So this is the 1115 macro. During this period of time, price started to spool lower, took out the sell side, tapped into this 930 value gap, and then pushed higher for the rest of the day during this day. Okay, so in this case, it was a when you know when to use it, it acts as a catalyst or a PDRA to enter the market or to exit the market or to know how the market is moving. Like, for example, here, when we see how price came up, disrespected it, and then also disrespected it again, it just tells you that the market really isn't going anywhere heavily, right? And we can see that look how price moved. It wasn't really moving in a sharp, clean manner like here, for example. Look at how when it clearly respected it, displaced higher, how price just showed you that we're respecting this PDRA and we've displaced higher. Now look at how price moved, right? So this PDRA is very, very important. Like when you see price actually respecting it, like this is another example here. I told you guys how it respects it here, but look, it was just really just like hovering around it, right? So this shows you that the market really isn't going anywhere, But when the market actually respected it and displaced away from it, like this case, and then you couple that with other factors like time of day, like an equal lows, sell side liquidity, a previous order block right here, when you couple it with other factors, it just becomes that nice, beautiful, just extra confluence. Okay, so this is the first example. I'm going to go over to the second example we have here on the chart. All right, second example here. Again, we have the 9:30 open, which happened right here, right? Right here, 9:30 open. And the reason I have two fair value gaps outlined is I have to harp on a very important point. If you look closely, I did say it's the first presented fair value gap after 9:30, right? This fair value gap here happened exactly on 9:30. There's a very important thing that you guys need to keep in mind. The first presented can only happen after 9:30. So it's not the 9:30 candle. It cannot be the 9:30 fair value gap, or the 9:30 fair value gap cannot be the 9:30 candle. It can only form as early as the 9:31 candle and on. The reason being is, the whole point of this is the first fair value gap after the market opens. The market opens at 9:30. If you guys remember the regular trading hours and the electronic trading hours, market closes at 4:14 and resumes at 9:30. When the market resumes at 9:30 here, this onward, so from here and before, isn't printed. So if we go and look and toggle to regular trading hours, so here we're on regular trading hours, and if we look, this is the 4:14 candle, and this is the 9:30 candle, right? So the gap is from the close to the open. This is the gap right here, right? So it's this right here. This is the gap, and this is the 4:15 close. I call it 4:15 close. So for this specific day, this was the gap. So there is not, this fair value gap cannot occur because this right here is not part of the 9:30 open and onwards, right? Now in this scenario, it's kind of like sad that the open is very near to the previous close. Like usually you'll have the close like so far off, or like not this close, where there will just be emptiness right here, right? Like for example, let me find a newer example. Here, right? You'll have something like this. Like this is a nice example. The first present fair value gap is not this fair value gap, right? Because there's no candle before it. It's as early as the 9:31 candle, which you can see here. This is the 9:31 candle. So in this case, the 9:30 fair value gap was this candle. It cannot be this candle. Understand? So if we go back to our example here, the 9:30 fair value gap is not this candle. It's this candle, right? So if you look, this is the first actual fair value gap. So if we toggle back to electronical or extended trading hours, so now we've toggled back to electronical trading hours or extended, and you can see how that the 4:14 close that I denoted here is obviously way back. Now we go back to the normal chart. So this is the first presented fair value gap. Okay, and now we can see how price respects it throughout the session or throughout the day. Consolidates in it here, respects it one last time, and finally just pushes off to meet some buy side. At this point, I just took, I believe, this buy side right here, maybe even this buy side. And then this is just PM session at this point. You can see here, even when it inversed it, it did respect it here, respected it here. So you can see how throughout the day when we use it, when you add time to the equation and other PD arrays, it just becomes such a strong factor that we can enter off of, okay? So now I'm going to go off to my journal, and I'm going to show you guys a couple examples from my journal of trades that I have taken using the 930 fair value gap. All right, this is a example. If you look at the right screen, you can see here how we have the 930 fair value gap. Now, I'm not going to bother trying to mark it out for you guys because now you guys know how to mark it out. So you can tell how here the 930 opening price is like around here. This is the 930 fair value gap. So you can see how we extend that through time. And then we add to it, or we couple to it, other factors like SMTs, right? We have a nice SMT price tapped into the 930 value gap. Very nice trade. Okay. And then even if you look at the lows, we had another SMT that signs or gives you a sign to exit the trade. If you guys remember from the SMT lecture, I said SMTs are a way to enter and exit trades. Here we had ES sweep the low, giving us an SMT, while NQ didn't sweep the low and giving SMT here. So on the first case, it gave an SMT. They were both going up until one made a higher high, the other didn't. So that's the first indication that we're going to shift in momentum or shift in structure, which we did, right? And then again, we had another SMT where price showed that we're not in sync. So that's another sign to exit the trade, and the market is probably going to reverse, right? It doesn't mean it has to reverse. It's an indication to get in or out the market. If you have other indications, like in this case, we have another factor here, which is the 930 fair value gap, coupling with SMT, with time probably. Like if you look, this is 11 a.m. This is probably like around 10:50 probably. Like I didn't get the line right, but if we get it right, it's like, this is the 2 a.m. macro, right? 10:45, 10:50, probably around there. So if you couple all these factors, now you're getting the idea how we can form a trade, right? I'm going to go on to the last and final example now, showing you guys executions of the 930 fair value gap. All right, final example here. This one, I purposefully showed you guys a loss, right? This is the reason me showing you guys this just tells you that you can't just, number one, blindly enter off of the 930 fair value gap. Plus, even if you're not entering blindly and you have your factors, like for example, for me right here, the first trade, clear sell side sweep with time aligning. If you look at the time of my entry, this is around the macro, right? You have a nice BPR, which I talked about before, which is also the 930 fair value gap. So all the factors here are very nice, aiding longs, and you have highs here, and I do believe this is some more buy side. So all the factors here are aiding my position, but if you're just incorrect on the bias, you're incorrect on the bias. And we can see here how price stopped me out twice. Okay, I tried to enter the same position twice. And you can see how it respected the 930 value gap inversely at the end to push prices lower and sweep out these lows. So I purposefully showed you guys this example just to show you that if you're wrong, you're wrong. If you're on the right side of the market, you're on the right side of the market. It doesn't matter what you're entering off of. Now, yes, you could capitalize on some profits. Like for example, you could have maybe taken some partials here in, or not even, like I entered here, so it didn't even give me any profits. This was before. Like whatever. The point is, it doesn't mean that you're entering off of the 930 fair value gap or a SMT or an order block or a breaker block or a BPR, whatever, right? It doesn't mean that you automatically are going to win. Like this is I purposefully showed this example to show you guys that you can be wrong, right? I can be wrong. even if you have everything aligning perfectly, like, look, this is beautiful. You have sell side being swept. We tapped into the new day opening gap, rejected off of it heavily. Look at how many factors. This is the first factor. This was the second factor of the new day opening gap. Time is the third factor, right? We have the 930 value gap and the BPR. That's 5 factors. Like, you would look at this trade and you would say, like, this is just gonna hit 100%, right? But guess what? I was wrong. The bias was bearish, not bullish. The price wanted to move lower, not higher. So I was wrong. So it doesn't matter how many confluences you have if you're wrong on bias. That's how I want to show this final example, just to show you guys there's not this magic PDRA or this magic thing to enter off of the markets off of. If you're wrong, you're just wrong. Okay. That's going to be it for this session. Hope you guys found this insightful. If you need questions, if you want to watch this again, please feel free to do so. This is a very important lecture. We're going to use this PDRA a lot. And yeah, that's going to be it. Hope you guys enjoyed. Sorry for my voice. I'm a bit sick. Hope you guys found this insightful. And until next time, stay safe and happy trading.